for more on the Fed's decision here, let's bring in Nicholas Economides. He's economics professor at NYU Stern School of Business. And Professor Economides, when we read through these results, one thing that we were talking about earlier was in terms of what the Fed was talking about with household spending. They're saying it's now moderate, down from strong. What do you make of that change in language?
I think they're trying to justify staying where they are. Mm-hmm. I don't think this is a significant change.
Do you think it's true? I mean, do you think that maybe household spending is pulling back a little bit? Are we seeing the average American get a little bit wary, a little bit nervous about where markets are right now?
I don't think the average American cares that much about where markets are right now. We care, mm-hmm. but I don't think that's, and the Fed cares, of course. But I don't know. I think people seem to be pretty confident in the American economy. I think there is a bit of a slowdown in the manufacturing because of slowdowns in Europe and in China, and there is some extra uncertainty because of the virus, and we see what happens with that.
I'm going to break this down if I were a student in one of your classes, because I think people do pay attention to their 401k. And the Fed does know that, on one hand, if they were to, upset the apple cart, which is that everyone is expecting no interest rate increase, but that the economy is actually performing despite the contraction in manufacturing, that perhaps they would like to raise interest rates, that they can't, because Jane and Joe Public has watched their 401k go up in value and doesn't want to see it fall.
Well, I think that may be true, but I think that the Fed is much more under pressure by people in the financial markets. And I don't mean the average person, right, but people in big firms, people who make big trades. They're much more under pressure not to increase interest rates from them than from the average person. At least that's what I think.
Professor Economides, one of the big, question marks here in the short term, at least, is the economic impact on a global scale that we could see from the outbreak of the coronavirus. Lots of talk as to whether or not that could eventually have some sort of impact on the Fed's policy down the road. As it stands right now, I know it's pretty early in the game, but do you see that having any material impact on the Fed's policy?
I do, actually. We are very much uninformed about how severe it is. We don't even know how many days it takes until somebody can get infected from an existing infection, or if it's even before symptoms show up. So this is a very serious question, and somehow the American experts don't have enough information on that. At the same time, it leaks from China that, in fact, there were many cases that they didn't report early, and when they're adjusting the numbers very, very quickly, part of it might be because of cases that were not reported earlier. Then there are some very disturbing reports from people who have epidemiology mathematical models that say there should be 25,000 cases, while the Chinese say there are 6,000. I mean, that's a huge difference. But in the end, even a big epidemic, it won't really change GDP, world GDP that much. I mean, in the worst possible case, I can imagine a 2% reduction in world GDP. I mean, and even that's kind of the worst possible scenario. So I don't think that in this world, with the American market doing so well, I wouldn't say that there are significant risks for the stock market in the United States.
And Jay Powell's probably going to get asked a bunch of questions about coronavirus. He will also get asked about something we keep talking about, which was the small increase in the the interest rate that they pay the banks to park reserves at the Fed. So if I'm at JP Morgan Chase, or if I'm at Bank of America, or if I'm at Citi right now, I've just been sent a message about what their aspiration is, where they want the Fed lending rate to be. How do I take that message, and what do I do with it, and how does it then relate to Jane and Joe Public as well as, other banks?
That's a very hard question, because in the past, the Federal Reserve had a well understood and public model about its policy and all the levers and where they should be and what the targets were. And right now, you and I are reading tea leaves.
Very simply, it seems as if they want to very slightly, without saying it publicly, we really want to move up with interest rates, and we'd like you to maybe pass that on to your clients, but we really can't go there. That's what's at play here?
I think so. I think you're right. I think
you're the first person to ever say that. Thank you.
There you go. All right, Professor Economides, thanks so much for joining us on set today.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.